Welcome back to the Stocks Update. Let's get right into the latest updates on Lucid Motors and what's currently happening in the market, because things are getting pretty interesting even if Lucid's own activity remains fairly quiet. This video is for informational and educational purposes only. It is not financial or investment advice. If you decide to invest, please do your own research. Your decision. To start with the basics, Lucid stock saw a slight dip today, down about 0.38%. Nothing too dramatic, with the day's trading range between a low of $2.60 and a high of $2.70. What's more concerning, however, is the trading volume. Only around 73.1 million shares changed hands today. That's significantly lower than the 106 million share average. But if you've been watching Lucid lately, you know this has become somewhat of a pattern over the last several sessions. We've been seeing consistently low volume, which generally signals a lack of active investor interest or momentum. But what's more notable today is what happened after hours. Nvidia just released its earnings report, and it was a strong one. That's likely to serve as a major catalyst for the overall market and could help push indexes and individual stocks higher in the coming sessions. We also have a key economic data release coming up, the Gross Domestic Product (GDP) report. Depending on how that data shakes out, it could be a game changer, especially for growth-oriented stocks like Lucid that tend to be more sensitive to macroeconomic trends. Now here's where things get even more intriguing. You might recall the recent uncertainty caused by those Liberation Day tariffs, which sent some ripples through the markets. Today, however, a U.S. federal court stepped in and blocked those tariffs from being enforced. This is a big deal not just for Lucid, but for the broader market as well. Investors generally react positively when trade-related pressures ease, so this decision could inject some optimism into sectors that were bracing for impact. Now, shifting back to Lucid specifically, it's been a rather quiet period from the company itself. No major news announcements, no press releases, just a very calm front. The only notable update floating around on social media is that Lucid's MP2 facility has logged a substantial number of injury-free work hours. While that's a positive sign from an operational safety standpoint, it's not exactly the kind of catalyst that gets investors rushing to buy shares. In short, Lucid has mostly been riding the waves of broader market movements, rather than making waves of its own. However, there is one data point that really stood out today, and that's the short interest. Short sellers increased their positions by around 1.3 million shares. That's despite everything else going on in the market. It's a bold move, especially when you consider that the current short interest sits at a massive 30.59% of Lucid's available free float. That's approximately 377.31 million shares being bet against. It's a high-stakes game, and it tells us a lot about market sentiment, at least among the bears. Speaking of short interest, the latest official data from Nasdaq has just been released. We get these reports twice a month, and although they're delayed, they still offer valuable insight. The most recent one, released after hours on the 26th, covers activity up to May 14th. At that point, there were 369.87 million shares, shorted roughly 29.9% of the float. What's interesting is that between April 29th and May 14th, short positions grew by nearly 25 million shares, more than expected. Much of this short-selling activity is happening in the dark pool, an alternative trading system that allows large institutional orders to be placed without immediate public disclosure. This brings us back to why I always mention dark pool transactions. These off-exchange trades make it difficult to track real-time sentiment and often involve large blocks of shares. Their opaque nature is exactly why regulators have been pushing for more transparency. The SEC's new transparency rule aims to address this, but we're not quite there yet. Until then, we have to keep a close eye on patterns like this. Despite the increase in short positions during that time frame, Lucid stock actually rose by 9.9% between May 1st and May 14th. By comparison, the S&P 500 increased by 5.15% in the same period. So clearly, Lucid was gaining momentum, and that could be one reason why the shorts decided to double down. They may be trying to suppress upward movement before it becomes a full-blown breakout. Now let's pivot to the options market, which also gives us a window into investor behavior. Today, we saw around 450K call options and about 273K put options traded. This aligns with a low volume we observed in the common stock. Even more telling, about 40% of these options trades were neutral, meaning they weren't strongly biased toward the bid or the ask. In simple terms, investors aren't committing heavily in either direction, which adds to the overall picture of a market in waiting. The total premium traded in the options market today came in at about $722K. For comparison, the previous day saw $989K, and before that, the number was around $1.4 million. That steady decline in premiums suggests institutional investors are pulling back from Lucid at least for the time being. This could be part of a broader market rotation, as more attention flows toward tech giants and AI-related plays, particularly in light of Nvidia's strong earnings. Despite the current lull, bullish investors remain optimistic. Many still expect Lucid to hover around the $3 mark. On the flip side, bearish traders are targeting prices below $2.50. With Lucid sitting at $2.66 right now, we're in a kind of no man's land stuck between bullish hopes and bearish doubts. Let's talk technicals. Today's closing price of $2.63 places Lucid between its pivot level and the first major support zone, also known as S1. The $2.51 mark represents a critical support level. It was tested today and held up, which is encouraging. On the resistance side, $2.69 is the level to watch. It was the day's high and acted as a ceiling. If momentum builds, especially with GDP numbers in line with expectations, we could see Lucid make a push toward the R1 resistance level tomorrow. Interestingly, despite all the market action and catalysts, Lucid has not received any new analyst upgrades or media attention lately. The company is largely flying under the radar, and its stock is being influenced more by macroeconomic factors than company-specific developments. From a technical chart perspective, Lucid is currently trading between its 100-day and 200-day moving averages. Over the past few trading days, the stock managed to push above the 100-day average, a significant milestone. It was during this breakout that short interest increased sharply, adding about 25 million more shares to the short side. This timing is suspicious and suggests deliberate efforts to contain upward movement. When Lucid was battling to stay above the 100-day moving average, shorts seemed to pull back momentarily, allowing the stock to rise. This kind of strategic shorting speaks to the level of manipulation and the complex tug-of-war happening behind the scenes. It's not just frustrating, it's a reminder of how much power institutional investors wield. So as we look ahead, there are a few technical levels to keep your eyes on. $2.78 represents the 200-day moving average and could act as a major resistance if Lucid starts climbing again. Meanwhile, $2.60 is the 100-day average and may serve as support in the near term. Where Lucid goes next may largely depend on macroeconomic catalysts like the GDP report and broader market sentiment. So what do you think? Are you using this dip as a buying opportunity? Or are you staying cautious, waiting for more clarity? Do you believe the next big catalyst will be a company-specific event, or is Lucid's future mostly tied to external market forces for now? Let me know your thoughts in the comments. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.